What's up, legends? Welcome to another day of Bitcoin doing nothing because we have FOMC. We are going to talk about what to be aware of leading into the FOMC. Now, of course, I do not recommend trying to trade before FOMC, but we're going to set up a couple of scenarios based on what we're looking at right here to set us up for potential post-FOMC information, going into detail, looking at some key liquidation levels, where we are in the cycle right now, and what areas we really want to hold if we're to believe that the worst is over for the moment. Now I'm going to zoom out and have a look at the higher time frames first because they give us a bit of a picture as to where we are in the cycle right now, and that's what matters most. Then we're going to go down into smaller time frames. So if you are new here, welcome. If you're returning, welcome back. Be sure to smash that like button, hit subscribe if you're not already subscribed, and turn that bell notification to all so that you can be notified every time I upload a new video. Now let's go over this because we have been talking about this pattern for quite some time on this channel, and there's a couple of things that I want to point out here. First of all, on the daily, whilst the wedge has not yet broken out, we are still within the wedge pattern and we have not yet broken this retail trend line here. So there is still a chance that we could come down even a little bit more, still line up with that trend line and still potentially be bullish. We do have a 1 month liquidation level at 24,500. We've talked about that level quite a bit and it is still there. Just so you know where I get these levels from, I get them from High Block, and I'm actually looking here on the 1 month look back period. I'm looking for the yellow zones that are closest to the current price. When I scroll over that, you can see there in the gray box it says 24,500. So if we were to come down to there, it would be $16 billion at that level worth of liquidations, people that would be wiped out, not to mention all of the amounts that are between current price down to that price. So it would be a lot of money that got wiped out if we did come down there. Now you can see that there also are lower levels. 21.8 is the kind of area for the lower level. However, these don't become a concern until this one breaks first. So the immediate concern is that 24,500. Then when we have a look above price, this is actually the highest amount at 28,100. So when we have a look at where 28,100 is on the chart, you can see I've marked that one here, and if price were to shoot out of this wedge and hit that zone, it's a bit of a worry because whilst it would break the wedge, which retail would consider bullish, and it would also break the 50 EMA, it won't create a higher high, and so that's still going to be a problem. It would be a good sign to break it, but the move would need to be proven with a retest of the 50 EMA if that were to happen. So there's two scenarios I'm kind of looking for FOMC tonight based off these liquidation levels. Number one is that we come down, maybe a stop hunt or something, into the 25,378 region, because that is the highest liquidation level in the last 7-day period. And the reason that I care about the 7-day period is because the market maker has held price over the last 7 days. So they're accumulating in this zone, and I want to know what is the highest level that would be easy for them to go for based off a news event. So when you see this pink spike out here, if I hover over it, you can see that that says 25,378. So that's my immediate concern for if we were to get a stop hunt to the downside on the news. That's the first level there. There is also a 1 hour vector in that zone, which I'll show you when we go down in time frames, and it's also in line with the 200 EMA. So looking at that, but it won't be a huge move because we're only like $600 away from that now. But if we were to then break through that, I'll be looking for this 1 month liquidation level at around 24,500. Now price can come all the way back into this area of interest here because we do have this daily vector candle right here that has not yet been recovered. So even if price came anywhere into that zone right there, as long as it didn't break below this vector, there's still a chance of upside to follow that move, because if it doesn't break below this vector, it's still going to be a daily time frame high or low. Even though it's going to break this trend line here, it would break the wedge, etc. But all of those things would be designed on purpose if we did break it, because it would be the market maker breaking retail patterns to get retail to FOMO short, but then not closing below this and shooting out to the upside. It would just be a trap. Unless it breaks below this vector here, anything that breaks this wedge or breaks this trend line would just be a trap in my opinion. So that's what I'm kind of waiting for. 25,378, 24,500, they're the areas that I'm interested in, that I would like to see a stop hunt to the downside, then push out to the upside. If it turns out to be a dramatic move, then I'm obviously going to reassess what happens in this area of interest right here. Number two that I have to be prepared for is that we don't get a stop hunt to the downside at all, because the other thing is there is a high liquidation level right here at 26,900. So if on the news we were to push up into a stop hunt to the upside instead, that is still going to create a lower high according to these candles right here. And it's very possible that we get a stop hunt high, then shoot down into this area of interest here. So it's going to be extremely tricky. I wouldn't try to trade those stop hunts. Just let the move happen. We're going to talk about whether or not I think volatility is going to come in closer to that news event and what to actually look for as it happens. But because we have this level above here and this level below here, it's just going to be tricky to be able to know in the moment which one the market maker is going for before the real trend happens. And for that reason, it's just going to be better to stay away from trying to trade FOMC and just get back into trading the recovery following the FOMC. Now, don't forget with FOMC, there's the initial announcement that causes the initial move, but then there's the actual press conference as well, and that can cause a second move. And usually this is the one that tends to be more volatile, because this is where the real truth comes out. So it's not an immediate reaction like most news events. Most news events, it's a 15-minute candle reaction and then we just go back to normal. But with FOMC, it goes on like basically for the whole hour and sometimes a little bit longer. So definitely wait for at minimum the press conference to finish before you make any moves, in my opinion. Now, talking about whether or not we expect volatility to come in, let's go and have a look at the 1 hour time frame. And we can see here that so far we've been holding the lows from last week. We did return there once here at around the 25.5 kind of area, but we've kept these trap traders trapped down here between 24,900 to 25,540. We have not returned into this area of interest here. We do have that liquidation level that I spoke about. You can now see it more clearly here at the 25,378. So if they spike down and that's all they come for, it's just going to be a retest of the low of last week. And that's actually fine, because you'd have 1, 2, 3 hits to that low of the week. If you get a trend change out of that on a lower time frame after the news, then you kind of know what's happening. So that would be best case scenario, because that's easy to trade. But then we also have this liquidation level up here at 26,443. That's where price fell away last time. And then we also have this other one up here. This is a large one at 26,900, and that lines up with the 800 EMA. So yeah, again, sometimes you can sort of pick before news events which way they're going to stop hunt before reversal. But in this case, our liquidation levels are significant both sides of price. They've held price in this range for the whole week, and the levels that we have really line up on both sides with very key levels. So as much as I love to degen news events, there are times when it's just not the smartest thing to do with your money. So let's talk about the possibility of volatility coming in closer to the news event. Now, in order to watch this for the purpose of learning, again, I don't think you should trade it, but for the purpose of learning, you probably want to be watching this on the 15-minute time frame closer to FOMC. And what you want to be watching is the open interest, the volume, and the price action as we get closer. Because we can see here in this whole range, since the weekend, after we had this fake move right here, since the weekend, all the market maker has been doing is accumulating. CPI hit right into the zone that I had spoken about on yesterday's video, and then we fell away. However, it has created higher lows since then. So it really was a bit of a nothing event, which is kind of what I expected. Now, when we have a look at this open interest, right now, the open interest on Bitcoin is at 104K. For me to believe that the market maker is setting up for a huge move for FOMC, I want to see that come up to about somewhere between 120 to 140K. That's what's going to give me the idea, because we do have a slowly rising open interest. So that means that sideways sideways price and slowly rising open interest means that people are committing in this zone right here. And that's what the market maker needs. They need that commitment, because commitment allows them to do moves like this to stop you out so that they can accumulate. So we're slowly rising all week, which is kind of good, but I want to see that get closer to the 120, 140 as we get closer to the actual FOMC. Regardless of where price is, that's what I want to see happen with the open interest. The volume won't likely come in until we are at that news event. Like, look how low we are today. Everyone's going to be sitting on their hands and waiting, but there are going to be some people that start as we get closer to FOMC. There are going to be people that start to try and guess ahead of the news. You know, there's a lot of talk at the moment about pausing interest rates, and you know, it's just a thing, isn't it, that when FOMC pre-news is positive, price dumps. When it's pre-news negative, price pumps. So always got to be very careful of retail sentiment, and you know, thinking that whatever retail are thinking right now, you're getting in on that early, because it can often swing the other way. So if price starts to rise leading closer into the FOMC, the last hour before it's on, that's the time that you really want to be paying attention to open interest. But if price starts rising as we get closer and the open interest is rising, that means you know that retail believes that we're going to get good news on FOMC. You know, it's not a matter of waiting for the results to come out. The price action tells you what the results are going to be, and that's really all you need to focus on. So if we start rising in price and the open interest starts rising in price, retail feel like this is going to be very good news. If we start declining in price, but we're still getting that rising open interest and we start to get volume increase, then retail for the most part feel bearish. And that's when we have to start watching for these key levels down here to get an idea of whether or not we'll stop hunt into that zone. Now let's have a look at the levels for Ethereum, because it's basically the same story. Ethereum to the downside has the low of the week that has not been retested yet, but just above price we have a liquidation level at 1767. So it's literally the same. It could stop hunt drop, it could stop hunt rise. It is very hard to predict right now. You're going to be watching again for the same thing. We want to see in this zone, even if price continues to stay sideways but the open interest continues to rise, that means that the market makers are getting the commitment that they need for a big move, and we will likely have that big move come the actual news event. But let's look at this on the daily time frame, because with Ethereum we have the same situation. So we have our big W formation here, we have rise 1, retrace here, rise 2, we're currently in the wedge again. So very similar to the daily price action for Bitcoin, and we have at this point in time stayed clear of this daily vector right here. Also, this liquidation level here lines up with the 800 EMAs. There's two of them. There's a large one at 1680 and then another one at 1697. So somewhere in that zone, great, would break the 200 EMA, but doesn't matter because it will hold the 800 if we stop there. But again, anything in this zone, if it does stop hunt into here and then bounce out of it, it's still going to be a higher low on the daily time frame and it would still be positive. If it breaks below it, we've got another one down here, but I really don't want to see price come all the way back down into that zone. I'm more kind of interested in this major zone right here. And the same, we have the same issue on ETH, that we have a liquidation level just above the wedge at 1858. So it could be, I mean, it would be a very big move from here because price is currently 1745, but price would have to move all the way up here, take that out, then have a dramatic move to the downside. It's not impossible with FOMC, it's really not, because even that liquidation level there would be almost a rejection of the 50 EMA. It would keep price within this wedge. It would just be a very annoying thing to happen if our new stop hunt was to the upside. It really would be just so much easier to trade if it's to the downside, because then we know, all right, they stop hunted, they did the final damage to the downside. We're now going up for that daily time frame level 3 rise. But if they do it to the upside, it's kind of all bets off and we have to reassess everything. So yeah, again, we need to do that after, because with ETH, price is between both EMAs. It's between between the 50 and the 200, which is basically just nothingness. You know, it's good that it's holding 200. It's not great that it's under 50 EMA. So we really need to get some sort of shift out of this zone to decide what's happening next on Ethereum. But even if it does go up to that, we've got a large liquidation level at 1905, and then we don't have too much beyond that. So again, if it was going to push out to the upside and actually continue, we would need it to get through all of this, hold it as a retest, then go on to create new market structure, because it's just kind of tinkering on the edge here. It would almost be a double top. It just wouldn't be bullish yet until we can get through this zone. So yeah, it's a tricky one. It's definitely a tricky one. Now let's have a look at the trading light heat maps and see if there's anything on there. This tells you here, when you see these two things, this just tells you that they're holding a range. So they don't want price below 25,850 right now, and they don't want it above 26,000 right now. So $150 range is what they're holding. Once one of these disappears, we may see price shift. So if this one disappears, we may see a move to the upside. This one disappears, we may see a move to the downside, or it could go the other way where price goes up into here, it fills them, so the orders don't get pulled, they get filled, and then we have the reversal or the other way as well. But it looks like they're holding the range for a reason right now. Once they break that range, maybe there will be a trade there. There is 2 hours left of UK as I say this, so it could be that we're just holding the range until end of UK, so that UK can set up for the US market maker. So if you are looking to trade, definitely don't trade before FOMC is my advice, but post trade will be fine. And if you're looking for an exchange to trade on, be sure to have a look at the links in the description of this video, because we've got a number of exchanges now that can be used worldwide, and they all give you 15% discount off your trading fees. OKX at the moment has an amazing bonus where you can earn up to 60,000 USDT in rewards for completing certain tasks. So be sure to check them out. And whilst you're there, also have a look at our traders toolkit that I've got listed for you down below. It will give you access to our website. If you're wanting to learn this whole method in detail, you can read more about it there. All right, guys, that's all I have for you for the moment. I hope that was helpful. If you enjoyed this video, if you learned something new, be sure to smash that like button, hit subscribe, and turn that bell button to all so that you can be notified every time I upload a new video. And I'll see you on the next one.